The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good. Billy Ray, feeling good. We're going to change the format just a little bit today because there's too many things happening, and we're not going to worry about the FTSE and the DAX. So let's pay attention to what we're watching. The main one to look at today, folks, well, there's two. We've got the stock indices we'll cover in just a minute, but the silver and gold, especially the silver. The silver is setting right at the 382 retracement again for the fifth time. And it's already taken out the high of the 382 by a penny. I don't know what happened to it after that, but that level of 2468 is very, very important. So we need to pay close attention to that. And on a personal note, I mentioned yesterday that Sarah and I were moving to Caracas, Venezuela, and that is not the case. I was joking with someone in the den that we know very well about Caracas. I actually know Caracas, Venezuela very well. Byron Tucker's wife was born there. Her father ran South American operations for General Electric for many years. So Liz was born in Caracas when it was a beautiful, thriving city, but hadn't been that way for a very, very long time. Now, we have a very large grain report today, folks. I believe it's due out just about any time now, so we want to keep an eye on that. But we'll do one thing at a time as we go through here and not try to be too cluttery up with too many things. But we want to take a look at one that we were talking about in the newsletter over the weekend, is the fact that we had this 382 retracement coming in the Australian dollar. You'll notice we went to 0.43. That's very, very close. Beautiful ABCD there now. And now we're popping above the 61% retracement. This is a really key level here at 72.15, folks, in that Australian dollar. Now, this is the December futures, and on the major cross rates, the pound, the yen, the Australian dollar, the Canadian dollar, U.S. dollar index, which we use as a guideline, but we don't trade in the euro. We use the futures markets, and the reason why is you can trade that for like $3 round turn. If you trade through a Forex bank like FXCM or one of the others, they're going to charge you a pip. Well, one pip in the euro happens to be $12.50. It's $10 in the Australian dollar. So you can see you can save your commission rate by about 60% if you use that. And unless you're trading 50 lots or higher, you can trade these very easily. They're very liquid. You get better information. It's a actual valid contract, enforceable by the Chicago Mercantile Exchange. So that's the reason why we do it, is mainly because of the commission that's involved. And also, it's just easier, I guess. But I've been doing both. I do both sometimes, but most of the time what we do the futures because they're so easy, to get in and out of, and such a cheap price, and it's pretty easy. But that Forex market is huge. I mean, it's many times bigger than the stock market. So that's the main thing. In 3 hours, we are going to have the USDA report coming out. So that's going to be an interesting thing to look at. But let's take a quick look here since we're chatting here with Mr. Z for a second. This is where we are here in the, let's get this up here so we can see it here. From when Mr. Z began bullish on these things, which was way below $10, we're up around the 1070 level now. You can see we've completed the ABCD pattern. We've also completed a 3-drive to a top pattern, and we're in the midst of a little bit of a bounce from up there around that 1057 level. Now, folks, these patterns don't mean anything on a report day. I mean, the overall pattern is bearish, but that's just over the last 10 days, okay? But as we noticed that these things, when they came out, they could really be very, very scary. So you have to be very, very careful. Now, you can trade into a report, but for heaven's sakes, you have to realize that you're going to put a stop in there And believe me, that stop could not make very much difference, because if you have, let's say you sold the beans. I know a lot of you folks don't do this with the commodities, but let's say you sold the beans here, the November beans at 10.58, thinking they're going to go down based on that pattern. And because you want to keep your stops relatively close, you're going to put a buy stop at 10.62. Folks, when that report comes out, there's no order setting there at 10.62, okay? So what's going to happen is, if it's really bullish, they're going to bid that way above 10.62, and you're not going to get filled at 10.62. You're going to fill at the next tradable high. It could be 1072, 1082, 1092, who knows? So that's why it's really, really hard to trade into a report. You can do it, but you realize that you have to take that responsibility. And frankly, you don't really need to do that. Wait till the report is out, let it trade for a little bit, and it's going to give you plenty of time, to enter the market. That's what I found. I just think it's the easiest way, to do that. But these stops can be run, and they can be changed very, very quickly. So keep that in mind as we're doing. We had the situation like that last night. I just wanted to bring this to your attention. Remember yesterday I talked about this absolutely beautiful setup that we had here in the S&P 500 up there at that 3438 level. It spent all day trying to make 34.38, and then right on the close, it had a 34.38 and a 34.39 sell price to get filled. And guess what happened? The market backed off like 3 or 4 cents, and then all of a sudden there was nothing but bids. I happened to be watching it because I knew it was on the close, and something crazy usually happens at that time, and that market just took off. You would have been filled because there were nothing but bids on the way. But it was really, it was just straight up. I mean, there was just no pulling back. It went all the way up to 34, I think 34.58 last night, then backed off a little bit last night, virtually nothing. And we backed at 34.60 level earlier this morning. So this is a perfect, beautiful pattern that just went farther than we thought it was going to go. And so you got to stand inside. So the game plan is you this is a 4-hour chart, so you go down to a 15-minute chart, and if it's right, it's going to give you a secondary pattern to do something in it, probably later this morning. So that's what you have to do. You've got to be able to do it. Fortunately, because of the pattern in the gold and the pattern in the silver, the gold was acting incredibly bullish. We got all the way up to the 1928 level. If you remember the other day when we were talking about the gold, when it was trading around the 1962 level, it was certainly looking a lot better. We can get that up here in 1962. I'm sorry, 1882. Let's get it up here. So we've moved about $50 up from that level, and we are, approaching. We've taken out the highs of October 8th of this week, which is very, very good. The 61% retracement is setting there at the 1933 level, very, very critical level. But the level in the silver is at, I will look at the euro in just a minute, Ruby, but first I've got to get ready for this break, and then we will look at the euro, because that is one that has moved it back to our break-even point, and we had a buy stop at break-even, so we're out of that one at break-even. And the only position that we, think we're out of the gold too. Yeah, we're out of the gold too. So we're really, we're pretty much flat here as we start here this morning. I'm hoping Shane is unavailable today. We were going to try to get him on, but we can't. We'll be right back, folks. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and we'll talk here about the euro. I've just posted the euro in there. As you can see here, this has been in a downtrend. We sold it up there at the 118.10 level. Broke down to 117.60, and we're looking for a little bit more on the downside. So we didn't get it, and the way we handled that was we moved the stop to break even, and we just got stopped out of that a little while ago. We'll be looking to re-enter if we don't go charging ahead above this key level today, and the euro is at 118.50. That's a major one that we're really paying very, very close attention to. Now, there's been some talk here in the den this morning about the the natural gas. We've been talking about that as a potential very, very bullish pattern, and we'll bring up what we looked at yesterday. You'll see here that this is one of the patterns where you have a very, very easy one to see. This is where we have the 135 pattern. You can see the first pullback is at right at the 78% level, almost misses it by just by a hair, and then it comes down and makes it exactly yesterday down there at the 252 level, and then this is very, very bullish, folks. This sets up for the ABCD pattern to come in up around the 280 level, and my limit minder just went off just a few minutes ago, showing me that we were right there. So let's just get this up here, and you'll be able to see that there's that perfect completed pattern in the natural gas. You can see the two triangles that are there between the 5th and the 9th. That is a butterfly pattern. It's a double ABCD, so this is where you take your profits in the market. You'll see that also that 1.64, that's 1.618 basically, and that's a red flashing sign that you want to be getting out of that for profit taking. To prove that to yourself, go back and look at October the 2nd, folks. You see the 1.62 there? That's the same pattern that you're looking at 1.64. Now, the reason it doesn't say 1.618 is because the Ensign program only goes out to the 100th decimal point. Well, folks, the 100th decimal point for trading is a little bit quite a bit overkill. So that's why those numbers are in there, just to show you how perfect they are. And they don't always work, But when they do, they certainly got things that you have to pay, very, very close attention to. At least from my perspective, that's something that I think is, important relatively, but whether it's going to be, and we'll be able to see that. Okay, what we're going to do here is we'll probably be able to have Shane on maybe in the second half at maybe around 9:38 or something like that. And we'll get him on. That'll be about 20 minutes, so we should be all right. Maybe he's in transit right now, folks. So hopefully he'll be back at that time, and we'll be able to take a very close look at some of these markets. The key ones today, folks, are watching the silver. Would someone be so kind as, because I don't get to look at these prices, can someone be so kind as to tell me where we are with the shut the front door and raise the rent with the silver? Where is the last on the Christmas silver and the high of the day? The last I had checked, we were looking at the 24.68 level, and I think we've taken that out by just a little bit. Good, 24.71. So we have taken it out, and that's what I wanted to know to make sure it's doing that. That's and the key level in the gold to watch. There are two actually at 1929. And also the other one at 1933. Remember, 1933, folks, was the high that we made back in August of 2011. So that's an important thing to look at. Now, let's get back to the stock market, because it's important that we see, what happened to that thing and why it failed. I don't know why it failed. All I know is that you can't stand in front of it. Look at this market that we had here. Yeah, 24.85. We should have had some stops in there. Thank you so much, Mr. Bill, for bringing that into my wheelhouse to take a look at it. Here's the NASDAQ on a 4-hour chart, folks. You'll see during September here, we've been there 1, 2, 3, 4, 5 times up here at this 11,600. And there was the key level yesterday, 11,595. Now, we shattered that. We went up to 11,600 and change, and that sets up a 61% retracement at 11,772 in that NASDAQ. So when these patterns fail, folks, you just got to get out of the way. I know it's frustrating. You think they're going to work all the time, but by golly, those are the ones that, they'll get you into trouble. But that's why they're also good, is because when they fail, it's telling you that you're on the wrong side. And, if you've got the courage and the chutzpah to go in and reverse, it's not a bad idea. The best way to do that, of course, is to go down to a 15-minute chart and, watch for a breakout of the 15-minute bar. And that's going to tell you that the market's still going strong. That's the basic bottom line, because you're not going to be right all along. I can tell you that, 100%. Some are going to work, some aren't. The gold worked perfectly. By the way, we have to give an award out. We have an award coming in just a minute. There's the judges have just come in, and the winner of yesterday's post is the gentleman who posted. I don't know who did it, but it was Dr. Copper. And here we are taking a look at Dr. Copper here this morning. Look at these numbers, folks. You see those 4 numbers up there, that 1.618 at 308, 1.618 at 308, 1.618 at 308. If we go smashing above 308 in Dr. Copper, look out, because you could be at 315 in a yes, you won the prize, Bo. I couldn't remember it was you, but it turned out. I don't know where it's trading now. Did we get above the 310 level? Because if we popped above 308, it's probably off to the races, and you certainly don't want to. You don't want to be on the short side of that, because it hit it perfectly, and the risk there is very, very small. And that's the whole key when you're watching these patterns, is they give you a spot to say, look, this is where I want to stand in the batter's box and see if I'm going to be right. And that's the main thing to what you should be looking for. So if someone would be so kind to let me know where we are in December copper right now, the high and the last, I'd like to know, because 308 per pound is real. You should be out. That's exactly, Bo. No. You made a decision yesterday to do that. Okay, but it's trading what, $250 higher? Well, you made that extra 5 points. That's 12 and a half, $1,250. You did exactly the right thing. Don't worry about getting the high tick. That not very many people get that. And believe me, I don't know what the high is. It's got to get above 310 in order to start breaking out, because 308.95 is, within $100 of what the exact number is. You're right. You don't want to worry about it. Just forget it and go on to the next trade. That's what you have to do. It's not. Maybe it does blow through the upside, but frankly, 308. I mean, look, you did everything you could. You talked about it yesterday, and it worked exactly perfectly the way you wanted to. And so you should take your hat off and take a bow, and we will, let you give another speech here at the TFNN Den a little bit later. There's always another trade. There certainly is. You can certainly bet your sweet Biffy on that. We got a break coming up here. If you have any questions, folks, it's 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've been asked by a couple people today, especially Mr. Z, to take a look at the U.S. dollar. What I've done is I posted the Forex spot dollar right here. It's not the December contract. It's the Forex spot. The reason why I did that is I have data going back since it started trading, and if someone asks for a long term, which we don't need to look at that here, you can see here that we have made on the very first chart that I've shown you here, you can see that the ABCD patterns that are there. We've made a beautiful 3-drive pattern now on the shorter term chart. We've taken out the highs of the previous days by just a little bit. We haven't exploded to the upside. And by the way, that copper went up to three. Someone said the high was 309.80. And the reason why that 310 is so important is if it gets 2 handles higher than the 1.618, it tells you that's a major breakout. And so it has to go to 310.50, and then it could easily go to 315, 320, whatever. But what we're watching here in the euro is at such a real critical level that this is where if you want to go short, this is a spot to take to watch it in the next half an hour. And if we're not charging ahead, that's going to be a very, very low risk entry because the retracement, it's still in a downtrend. On the longer term trend, it's still in a downtrend. But, frankly, look at this here. Let's just get this up here. This is the euro on the daily. And all I did was I brought one particular chart here that's really important. You can see the high up there at 120. Okay, we sold that at 120.10. We covered it at 116.50, and we put it back at 117.80, and we broke it. We went back to break even on that today. That was equivalent to 118.10 in the December futures. But look where we are. We've taken out the high of the 5th of October, just 4 days ago. That's a 50% retracement. Now we look at this on a shorter term time frame. You can see that the ABCD patterns are complete. The 3-drive patterns are complete. So this is a place where you don't have to risk very much, and that's why you want to be watching it real closely. So it's last I saw it was trading within about 10 pips of the high. So you wait a half an hour, and if it's not going crazy to the upside, it's telling you market feedback is saying, look, there's not a whole lot of buyers up in here, so that means if you want to sell it, you're not having a lot of risk. On the second hand, on the flip side of that, look what happened to the S&P futures once they went through there. Holy moly, guacamole! That thing just took off like a rocket, and that's what you've got to be. That's what you've got to be worried about. Worry about the ones that can get in your back pocket and try to take all your money out of your wallet. Those are the ones you have to worry about. Ruby, I don't think you should worry too much about Tom with the COVID-19. I spoke to him earlier this morning, and he gave me no indication that he was under any stress at all. He had a little bit of an upset stomach, but I don't think he has any of the major symptoms. But, I didn't get past the first 2 weeks of medical school, so don't use my analysis for that, but he was in pretty good spirits when I did talk to him this morning, so I think he's going to be okay. He's incredibly healthy, but hey, this stuff can really knock you on your kabuki if you're not careful in here. So let's see how we're exploding here this morning. We probably got a lot of buying coming in to these things here. What are we doing here? Let's get this up here so I can double check to see where we are with this euro to make sure we don't go absolutely nuts. Yeah, we've been here for roughly an hour at that 118.15 level, and I think you got to see it that 118.20. Then you'd say, yeah, this thing has probably got legs, to go on the downside. But the key time of the day to watch the euro today here is on a Friday is at 10:30, and I believe that's after the first hour of trading with the stock indices. So that's a pretty important one to remind yourself of where we are here. Now, so far, the high in the gold has been held by the 1929 level. That was very important. We did clear the 382 retracement in the silver was at 24.68. We got up to 24.86, I believe. And that tells you that has a potential for a pretty good breakout in the silver if it continues to move in that direction. We got the S&P is still running pretty good. It's trading up here at the 34.60 level as we open. And it's interesting today because the pattern is so very clear. I'm just going to bring this up and let you folks take a look at it because this is what the AI program is showing for the E-mini today, and that means the top should come in between 10 and 11:30. So watch that 11:30 time frame because if we start down after 11:30, folks, that's four hours of a very, very strong trend. But it has to be making a high or near a high, either lower high or at a high at the 34.61 level at 11:30. That's the whole key, because this is all time related. It has nothing to do with the price. You can learn to do this yourself if you study the markets enough, but that key level is between 10:30 and, again, 11:30. The way I do this is I watch for the sale at the 10 o'clock level, which is in about 24 minutes, and if we're making a new high there, and that new high, let's just take a quick look to see where we should be. The yesterday's high we made overnight came in at, what was that? We were at 34.59 and change. So if we did the expansion numbers on that, it doesn't take too much to do. We go from the high down to the low, and that tells us the high you want to be looking at is around 34.63 to 34.69. Those are the two levels that you want to be watching at 10:30 and again at 11:30. That's when time and price would come together, and it doesn't always work that way, but when it does, it gives you a better chance of being able to do it. So we'll see. Okay. Anyway, let's move out. Is Mr. Shane going to call in here in a minute? Let's hope that he does. We always like to chat with him. Why don't he'll call in right after the break, maybe, if he's not busy. He was probably taking care of his little two precious jewels today. And we'll see how we go through here. I'm going to ask him how the schools are going down there in Miami, because, here in Tucson, it's just business as usual. But they certainly are using social distancing and everything and being relatively safe, because our death rates have dropped dramatically. They don't actually have but one person in our large hospital here is in intensive care on life support, but that person is 86 years old and under a lot of other things happening. So that's pretty much it. Okay, here we are trading at 34.58. Remember, folks, this is my 2 cents worth, 34.63 to 34.69 between 10:30 and 11:30. That's what you're watching for in the S&P if it gets to that level. But believe me, look where we are, folks. We had a perfect signal set up. I mean, just absolutely as perfect as you could possibly get. And I must have had 5 emails about why didn't it work. Hell, I don't know which ones are going to work and which don't. But look at this. This thing was so perfect that you couldn't have done anything any better. I mean, it was right at 34.38. Took all day to get there. And then right on the close, bada bing, bada boom, and then boom, bada bing. So the numbers today are 34.63 and 34.68. But that's neither here nor there. We'll be right back. 877-927-6648.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks, if the trading gods are on our side, we should have Shane Smolian, the wolftrader.com, on the line. Are you there, my friend?
I'm here, Larry. Can you hear me?
Perfectly. We have several requests that they've asked me to have you on the show to try to describe what Chairman Powell was trying to say yesterday. There was a lot in the news about evidently he was ambiguous and actually nervous. Do you have any feedback on what he was talking about?
Give me 1 second, Larry. Here, I just lost my screen here. No, I don't, Larry. I didn't follow his speech too much yesterday. Here we go. I just follow what they're doing. I mean, sometimes his speeches are important, but I really just track the data that's coming across that they do on a daily basis. And this Fed juice has been in a buy for quite some time. Larry, they've been acting very erratic. They started out very strong during COVID, and then they really, when we got up to this high here, they pulled back on the juice significantly. To my confusion, it came all the way down here. I didn't know why they were doing it, and then it was just like they flicked a switch and they started up with the juice again. Now we've had a really good week this week. The S&P has been long since last Friday at the close, and the next day trades, we've had this going up. This has been just a substantial week after a few weeks of really just some confusion as this was bouncing along the bottom. I think we really have some clarity now. And the nice thing is that we have the Fed juice in this buy, but we also have the Astro now pushing with it, which is very important because now when you've got the Astro with the Fed, you've got the chance for this market to really keep going here now. So it's like I said, it's been a really nice week. Everything, we've just been up every single day. Now, even on that U-turn that we did have that U-turn where Trump said he wasn't going to do the stimulus. The Fed juice came through with shining honors. It told us to stay long. I know a lot of people had doubts at that point when it reversed, but it reversed right back up, and it looks like we're trying to climb right back higher on this. So this, to me, this market looks extremely bullish. I said this at the beginning of the month, and I know last month was kind of a rocky month, and it was really just bouncing around. But again, this week really has been a good week across the board, not just on the S&P. Now, I know you were talking about gold. Gold is actually behaving well too. But before I get there, I'm going to go to the U.S. dollar here because we do track the U.S. dollar. The U.S. dollar went into this sell on 10.7 and 10.8. And now one of the things that I've been talking about with people is that I believe the stimulus was going to happen. Even when Trump said he wasn't going to do it, I said, no, they're going to do it. And then one of the reasons is I could see all these charts lining up. You know, when you have a stimulus coming across, a $2 trillion stimulus, there's almost no way that the dollar can go up if you're going to push $2 trillion of stimulus. I mean, I guess it could in some strange circumstance, But for the most part, when you push out $2 trillion in stimulus, if that's what it's going to be, the dollar is going to fall. So this sets everything up perfectly. We got our dollar in this double sell on the 7th, on the 8th, and this is now has some room to move lower. Now that's important because the dollar tends to push everything else up. So these other markets become very sensitive. So for example, gold, for example, we've been expecting this up move today because of everything that's going on. So I put everything together, like we have the stimulus coming out, we have the dollar that's in the sell, and now we have the Fed juice here that's in this buy on the dollar, and we have the cat master signal here that's in a buy. So you have both of these in a buy. This week was incredible. I mean, you have an ideal setup here on gold. And then the other thing that I pointed out last night, I did a video last night pointing this out, that when these Bollinger Bands start to come in, this is a very reliable indication that some type of a big move is coming. So I know people like to use Bollinger Bands in different ways, but for me, this is the most important way to use the Bollinger Bands, because every time they come in tightly, you're about to get a move. Now, it doesn't tell you the direction of the move, but I think when you have the Fed juice and you have the cat masters, these two lining up, now you've got a chance. And the fact that that volatility was coming in, now you've got a chance for this to expand. And I think this could go for a week. I know it could go possibly into next week. We'll see. Now the question is, how high can this go? We did hit a seasonal high back here in early September. So really, it does depend upon what the tape is doing, which is the Fed juice and the Astro together. But right now, this was an ideal setup, and I feel like gold is really one of our best markets right now to track. I mean, this cat signal that we do, it's a combined Astro and transit. It tracks these markets beautifully, and it's tracking gold beautifully. So can you guys see the gold chart up there?
I believe so. Yes, I believe so.
Because I'm
yep,
seeing,
we got it.
Okay. So yeah, so that's the idea there. So you know, silver, gold are tracking well. So silver, similar situation. They were both in a buy. The Fed juice was in a buy on the 1st, and the cat master went into this buy on the 8th. So I think on the short term, when I say short term, I mean possibly for a week or so, I think these have a chance to rise simply because I think the dollar is going to really get hammered here. And you know, I do think they're going to try to do some type of a stimulus, Larry. I just can't believe they're just not, right before an election, they're just going to all walk away from the table and not do something. So that's my view on that.
Sounds great. One other question that we have is, are interest rates going to go higher or lower? Because we're at some pretty important support here in the notes and bonds down here at this 173 and change level in the bonds.
Okay, so let me tell you how I feel about that. I can't see these bonds falling too much with the Fed coming in and buying. And now remember, this is one of the direct markets that they're targeting. They're coming in and buying these assets. They're buying these bonds. So for me, it's very hard to imagine that the bond market could fall with the Fed in there during an active quantitative easing. Because remember, we have like full-blown quantitative easing. They're actually buying, in addition to all the corporate bonds, they're actually buying treasury bonds. They're buying mortgage-backed securities. So they're in there buying. So the question is, I don't think so. I don't think it can fall too much. As long as you have an active Fed, you can have these dips in the bond. But I just can't see it, Larry. I mean, they're in there every day buying these bonds. I mean, so if the Fed wasn't there, I would say definitely interest rates could rise. But it's a tough battle because I always make the comparison to LeBron James. You got LeBron James in there, and he's on the side of the Bulls and he's on the side of the bond going higher. So it's just, this is one of the toughest markets to trade, the bonds, because the Fed is in there and doing what they're doing. So, oh, by the way, I'm going to start doing a weekly top 10 countdown, you guys. So if you want to head over to I have the YouTube channel today at 3:30. I'm going to have a weekly top 10 countdown where I count down the top 10 events of the week. This was a good week. There was a lot going on in multiple markets, and I feel like we were hitting across on all cylinders on most of these markets this week. So if you want to check that out for a little bit of a longer review, it's going to be at 3:30 today on the YouTube channel, Wolf Trader Futures. So you can go there and check it out. But anyway, getting back to this bond situation, I just can't see it falling too much, Larry. I mean, there were some days where they came in and they were purchasing up to $80 billion a day. I mean, so the bottom line is if they want to stop it, they can stop it. I mean, they've pulled back now. The purchases they range between $2 to $10 billion a day now. But at any given time, they have a mandate. They can do whatever they want to do. They can stop this decline. So that's the problem with the bond. And so I'm very hesitant for longer-term forecasts on the bond.
Great. Hey, thanks for being on, my friend. And we'll have you on next week for a full session if you're
Thanks,
if
Larry.
you're around.
Thanks, everybody.
Okay. Shane's Smolian, folks, thewolftrader.com. We'll be right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and someone was kind enough to send us a chart of the U.S. dollar index drawn to perfection. You see that the low we made today was a spot-on pattern completion that was equivalent to that euro that we were talking about. Just since we've been on the air here, it's dropped about 20 pips. And that's basically what you're looking at is what the risk was. And all we're looking at, folks, is to look at market feedback. That's all we were looking for, just to see if there was buying above those levels. Now, I'm not sure what's happened with the copper, but I would bet 10 dimes to a donut that we probably didn't get any higher than 309.80 in the copper. That would be my guess. I doubt seriously whether the copper would have made 310.50. Could someone give me the last update of what the high end copper was in the last? Because there's a lot of numbers up there. You're talking about serious numbers at that 308.50 level. So that's why we're paying close attention to it here this morning. Do you have a target if it bounces in the dollar? Ruby, God love you, Ruby. I think it's wonderful. It's a little too early, Sunshine. You're going to have to get back with me in about an hour because you got to give it a little bit more. If we break more than 40 pips in the euro, that would tell you that you're at your first profit objective there. Look at scene out there. Thank you, Marshall, and travel safe, Marshall. It's great seeing you guys again, and hope to see you again in the spring. But the number in the copper, we're looking at that 308 to 308.50. There were four numbers moving at that level, so that's why it was so very, very important. Now, folks, it's very important to live every day in an attitude of gratitude, and may God bless. And we'll see you on the flip side on Monday. We got a lot of things happening, hopefully, and we'll see what's going on, and hopefully everybody will be in great shape. We'll be right back with you on Monday morning.